Hello there, another day, another Sydney Direct interview with me, Natalie MacDonald. Now, last week's Data Week was pretty chock-a-block for Australia's financial markets, but what sort of picture is this giving overall of Australia's economy? My next guest, James Bond, Chief Economist at the Financial Services Council, is joining me now to tell us a little bit more. James Bond, thank you very much for joining us today. Much appreciate your time.
Thanks for having me.
No problem at all. Okay, so firstly, what for you was the headline act almost in last week's ream of data that we saw?
Well, on the domestic front in Australia, we had two pieces of data come out that were important. The first was retail trade for the month of September, and that was particularly strong, growing at 1.2% in the month. And labour force data, which wasn't as strong and tracked sideways in the month.
How would you respond then to arguments that with a weakening trade balance, steady retail sales and strong labour force data, how would you respond then to the argument that actually we've got a pretty mixed economic picture overall?
Well, I actually see all of this data as being consistent. Retail trade was strong in the month, but that's consistent with a rebalancing from Western Australia, where the mining boom's been largely driving growth in Australia, to the east, which is much more driven by financial services. So financial services grew by 6.1% in Australia last year, which is double the rate of GDP. And the eastern states being much more driven by financial services, which is the significantly largest sector in New South Wales and Victoria. It's consistent with growth in consumption in those states. The trade balance, that's consistent as well, because what drove the increase in the deficit, the trade deficit, was a depreciation in the Australian dollar. So imports grew by 6%, the Australian dollar depreciated by 6%, so it's quite consistent.
You touched there on the Australian dollar. We did see some upward movement at the beginning of this week following disappointing US jobs data on Friday. This is after the Australian currency dipped to a 4-year low. Is this upward bounce that still remains in the Aussie dollar confirmation almost of the RBA's steady policy stance moving forward, and also those repeated claims from the central bank that the Australian currency remains too high?
Well, it's a new thing for the RBA to be talking about the currency in this way. In the past, over the past 30 years, the RBA has done a very good job in managing the economy through interest rates. The fact that they're talking about the currency probably reflects that they don't want to talk about the other issues going on in the economy, because they don't want to talk the economy down. So this rebalancing that's taking place, the economy is quite fragile. The rebalancing from Western Australia to the eastern states, the economy is quite fragile. So the RBA is talking about currency rather than some of the issues around that rebalancing and the risks around that, the downside risks around that.
If we look ahead then, what's the next sort of data calendar item that you might look to for ideas of future growth or stability?
Well, on the 27th of November, we have Australian capital investment and intentions coming out. And this is quite important. It's important for a number of reasons. Firstly, investment's obviously a big part of economic growth anyway, but in particular in Australia recently with the mining investment boom, it's been an even bigger part of the economy. And as the mining investment boom comes off, how quickly it comes off, how quickly it falls, and how the rest of the economy picks up the slack in the eastern states, that transition is very important. If CapEx is much weaker or starts to come off much more quickly than people are expecting, then we can expect to see economic growth to be much slower. So it's really about how CapEx intentions play out in the next 12 months, 2 years, and whether the rest of the economy can take up the slack from that decline in the mining investment boom.
James, once again, thank you so much for your time today. Much appreciated.
Thanks, Natalie.
James Bond there, bringing us all of the latest. That's all I've got time for right now. However, do stay tuned. I'll be back with plenty more exclusive insights right here from Sydney, Australia. For now, though, it's goodbye.